Hello, and thank you for tuning in to Talk Financial TV. This week we attended a business investment seminar hosted by Goodbody Stockbrokers in Ireland, and there were a couple of interesting points that we at Talk Financial thought we should share with you, purely in the interest of informing our clients and those people who visit us on this TV channel for your own knowledge and for your own benefit. Goodbody Stockbrokers are a widely respected stockbroking firm in Ireland, formerly owned by AIB, but now a fully independent stockbroking house. So bear with us while we take you through just a few of the more salient points that are being raised on the day. First of all, according to Goodbody, they believe, now that we're in June 2012, that we are overall seeing a global economic recovery. Ironic and all as that may sound, when you look at equity and output graphs on a global scale, you find that relative to a couple of years ago, albeit that the graphs are very, very volatile, on balance, we are marginally ahead of where we would have been a couple of years ago. The graph is very much up and down as opposed to steady, but nevertheless we are making small progress in a very volatile environment. The developed economies, mainland Europe, Ireland, Great Britain, States, China, we are burdened with an awful lot of debt. Obviously in Ireland that is also sovereign debt, but most of the developed world is burdened with debt, and that is really holding back the whole issue of a global recovery. Not only the debt itself, but also the lack of a plan. There seems to be no real plan being put forward to address the issue of global debt. Goodbody are stockbrokers of the view that we are looking at a sustained period of lower interest rates. In fact, they feel that interest rates may even fall a little bit now that Jean-Claude Trichet is gone from the ECB. They also feel that equity markets are going to remain volatile for quite some time. They say that the global monetary policy is one of inflation. The whole issue of quantitative easing, which is the physical printing of more money in order to ease financial pressures and liquidity problems, has been apparent for the last 3 years. And they're of the view within the Goodbody stockbroking house that global monetary policy is in general inflationary. And that could very well be good for equity markets if you're patient, because during inflationary times it means that prices and values will actually go up, and therefore may not be a bad time to invest in equity markets globally if you have the sufficient affordability, and as we always say in Talk Financial, once you have the correct appetite for risk. In other words, that you've got a tolerance for the potential of losing money. According to Goodbody Stockbrokers, the summer of 2012, the outlook is unlikely to improve. I'm just reading here from their report. They're of the view that the European and the euro currency pressure is likely to remain with us for some time. Political uncertainty, as we have been predicting in Talk Financial, is going to arrive on our shores in the States, or rather from the States, in relation to the presidential election, which is now going to take on its own form now that the Republicans have settled on their nominated candidate in the form of Mitt Romney. And with only a number of months to go to the November election, clearly that's going to be a very hot political topic. They've said that the Chinese economy and that the figures that are forthcoming from the Chinese economy are somewhat obscure. And we don't find that too surprising. We've been saying for the last 18 months in Talk Financial that the Chinese market, in our view, is overpriced and overheated, and they would share our opinion that the Chinese market is not as strong as people might think it is. However, what would obviously go to maybe save the Chinese market to a large extent is the fact that they've got such a massive population and such a massive export trade. It is their exports and the global demand for Chinese produce that would more than likely mean that any retraction in their projections for growth would probably offset the risk of a recession or the risk of a major economic crisis in China. Goodbody also state that there is a precedent in the past for the European area to perhaps be stuck in recession while the rest of the world moves on. It happened in 1992-93 when the global economic output continued to grow at a reasonably steady inflationary pace while Europe remained in recession. Those of us who are old enough to remember the very early 1990s will remember the whole ERM crisis, and apparently a lot of the economic conditions that drove the ERM crisis in Europe are with us today in relation to the euro currency without having a negative impact on the global market. Going back to China, they're saying that in terms of alternative investments, China retail is up, they reckon 5 or 6%. The official output figures by China is around 7.5 to 8%. The more objectively based opinion by Goodbody is that it's probably closer to 5 or 6%, but that's still real retail growth, and of course retail growth would reflect on consumer sentiment because people are spending money, unlike over here. The other pressure that is in mainland Europe and in the Eurozone area is the fact that we have got an ageing population, and that means as we all start to approach our retirement years, we are saving more and spending less, and this is going to have an even further negative impact on the recovery of the Eurozone area generally. So in conclusion for now, according to Goodbody in June 2012, their view is that the Euro recession will continue for some time. How deep, we're not too sure, but it is certainly here for the foreseeable future. China market has not yet stabilised, but while a retraction is clearly on the cards, as we've been predicting in Talk Financial, into recession mode, probably unlikely based on very strong export figures and of course a very, very strong population with reasonable positivity in China retail sales. In the longer term, global monetary policy is inflationary. That could very well change in time to come. Interest rates will remain low for the foreseeable future, and there's a widespread belief in Goodbody that the pressures of Europe do not necessarily mean an ongoing global fiscal retraction. It could very well be that the crisis in Europe will have to be managed by Europe while the world looks on but continues to grow and continues to expand itself. So our message really is volatile times ahead. Uncharted territory to a reasonable degree. The market, the investment market that is, does represent value, but you need to know what you're doing. You need to be very aware of your sectoral investment, your geographical investment, your exposure to currency, and to have a decent diversity. And most importantly of all, before you invest, make sure you understand the risk of what it is you're taking on. Thank you for listening. Bye-bye.